Not a bad January, except for RadioShack. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday, the 31st of January. Can you believe we're almost finished with January? Here's a trading tip for you. Never buy something just because it looks cheap. We'll be looking at RadioShack and just how disastrous that turned out to be. We'll also be looking at 3 stocks on the move today: Edward LifeSciences, MATTEL, and Best Buy. Always remember this. Don't fight the market, move with the market. Now let's go to our charts and MarketClub's trade triangle technology and see what's going on right now. So we're starting on my home page, as always. We're going to be going to the Portfolio Manager, and I'm going to go right back to Portfolio. And we're going to look at the first is RadioShack, down 20, almost 30%, 29.81%, minus 100. But look at this, and this is the important thing to look at. If we look at the trends, you can see from 13.16, we've basically been negative on this market. We're currently trading at 7.18. Again, this is a market that's been going down constantly. And RadioShack, does it have the edge? Does it have the cutting edge sort of technology, the kind of pizzazz people are looking for, the next generation of people want iPads and so forth, and they just don't have it. I mean, they basically threw Sprint under the bus today, saying that it was all Sprint's fault. No, it wasn't their fault. Well, guys, you've got to man up here and take some responsibility. You're running the corporation, not Sprint. You just hitched your wagon, or your horse, to the wrong wagon, I guess. That's the only way I can say it. But you can see it's clearly a downtrend. That's today's action right down there. Boom. Huge drop. I mean, massive volume. If we go down and you see the volume, you see it's just massive. Over 30, probably 35, 40 million have traded so far, way beyond the normal volume. Probably a blowout for everybody. Probably said everybody just dumped it right at one time. Would you buy it here? No, never buy something because it looks cheap. Okay, let's go to our next market, and we're looking at the S&P 500 plus 75, meaning it's an emerging trend, I should say. You're just below the PSAR, which means you're going to see a little bit more consolidation. We are expecting this market to consolidate somewhere between the original buy point, which is 1292 on the monthlies, and somewhere between the 1300 level. So I would not be surprised to see this market for the week perhaps just chop around a little bit as it consolidates. But we are looking for this market to go higher, possibly to the 1370 to 1380 level a little later on, by perhaps as early as May, based on our cyclic work. Now, we did have a question yesterday about our cyclic work. What does that mean in the 50, 200, the golden cross ratio? So let's just put that on the chart again. We talked about this yesterday, simple moving average. And I've already got it lined up, so it's on there already. And I'm going to take the Donchian trade channels off because it's going to make it just easier to understand. So let's take the parabolic off and this. So there we are. We have just the crosses over. I'm going to scope this out a little bit further, maybe 5 years. And what we're looking at was basically when these markets crossed, and I'll put my illustrator on here to show you because I don't think anybody got a very clear picture of this yesterday. I hope they did, but maybe not. Let's repeat it. So here you can see the crosses where they took place right here. This is called the golden cross. So it took place right here. It took place right here. And it's possibly going to take place right here. Now, if you look at these lows, like here, here, and here, these are pretty evenly spread out cyclically. And every time you've had a low like this, you've had a pretty pronounced move up like that. So we're looking for if the pattern stays the same, and that's the big if it stays the same, then this market should be going up until about the April-May period on the upside. And we're looking to go to the 1380 level, which is right around there, probably in line with these highs that we see right here. But it could possibly go even higher. So let's just see how that plays out. But generally speaking, the market, the golden cross, hasn't crossed yet. It may not cross, but this is the important thing. These lows here are very cyclical, and they came in pretty pronounced there. So you should be looking at the highs going somewhere around here. So we're looking for the April-May period as a high period in the S&P 500. We'll see if it plays out. It may not, but remember, you always go with the market. You don't fight the market. So let's clear the screen, go to our next market. I hope everyone's clear on that. If we go to the silver spot, and we've got a cross there, but it's not so important in the silver. You could say it is, but a lot of people don't pay that much attention to this particular cross. It's crossed right here. What's more important to me is I'm going to take that off the screen because I just want to look at the other tools we have for this, the Donchian trading channel, the parabolic. and I want to get much closer in probably 6 months, maybe even 3 months. We'll do 3 months. This is the big thing today. We thought this market was at a high period because of our trade triangles. Our monthly trade triangles are still negative from 33.15, pretty much where the market is right now. And we have been short or have been negative on this market for quite some time, except for our intermediate term indicators, which are still long. You'd be out of this right now, but because of the daily, and we have a way of filtering our trades, and if you remember, you'll know how to do that. And if you're not, just give us a call, or you can go on our website. So here we are. The market is very close to this parabolic number. The PSAR is at 32.72, so another 30, 40 points lower. This is going to trigger this point, which is the first time it's been triggered since back here, and that's back in January 2nd. So we've had a nice move up in the metal markets in the month of January. Is it going to continue? I somehow don't think so. I think we're going to see more of a two-way market coming into February as perhaps the equities take a stronger stance on the upside. But we'll see how that plays out. Generally speaking, we're looking for this market to sort of drift lower. We have a plus 60, meaning it's a trading range now as opposed to a emerging trend. So let's go to gold, which is what everyone wants to see. Gold's quite a bit further away from its PSAR. The PSAR starts at 16.95 today. So, but the key level to me is going to be this yesterday's low around the 17.16 area. If we go below that area, then I think we're going to see some more downside pressure. I don't think that's going to happen today, but notice this is a doji line yesterday. Not a good one in terms of dojis normally reverse trends, or it's an equilibrium between the buyers and sellers. So today's action is going to be very important to see how we close. If we close in a red candle down, I think that's probably put in an interim top, and as you can see, we popped out of the Donchian trading channel, so I would expect it to come back in. So again, our long-term monthly trade triangle is negative from much lower levels, but that doesn't mean to say it won't be profitable. It doesn't say it won't change, but the key thing is here you have to filter your trades using the weekly and also the daily, and that's one of the key things of being successful in the marketplace. Again, you really want to don't fight the market, you want to move with the market. So let's go to our next market. Next market we're looking at is the copper market. Now the copper market's had a really nice run up. If you say from January here around the 340 level, you went all the way up to 395, somewhere like that. You've come back down a little bit, little bit of profit taking, but nonetheless the market is in a good shape. You are below the PSAR, meaning so maybe perhaps more consolidations meant in this market, but generally speaking, I think this level here around the 370 level, 365 level is going to be met with good support. And what you can do there is just use our Donchian trade channel, our Fibonacci tool, and measure from the lows here, and you can see somewhere between the 372 and 366. I think this market will find good support. 366 pretty close to these lows, these highs back here in the period of December. So let's see how that plays out. Generally speaking, though, it looks as though the trend is still clearly up. Both the weekly and the monthly is positive, and we're plus 75, meaning it's an emerging trend, and I think we'll see that market do a little bit better. So let's go to our next market, and that's going to be the crude oil. Crude oil has now dropped into a 55 score. That means it's a trading range, but look at today's action. You've just very, very choppy. You've got the PSR was down yesterday, now it's up today. It's situated at 98.27. We're trading at 98.77. Is it going to go below there? Somehow I think we're sort of stuck in this range, but I do think the key levels are very clearly delineated here, and this is what they are in my mind. So I'm going to just put my telestrator on again. And the first thing I'll be looking at right now would be this level right here, this 102 level. If we go over 102, I think that's clearly a breakout to the upside. 104 is the next key level, but certainly 102 is the start of it. And on the downside, you're looking at the 97 area. I think if it goes below 97, I think we probably put in some more pressure, and we'll test these lows right back here. And this is right around the 93, 94, 94.50 area. I think that's pretty good way to look at it, where 93.50, 94.50, somewhere like that. But generally speaking, I could see the market going down there. But right now, we're sort of in this crazy 55 range, which means a trading range. So we could go either on the upside or the downside. Still too early to tell, but generally speaking, with a longer-term trade triangle in a plus mode, I would say the odds have to favor the upside. But remember, it's the Mideast, it's oil, it's volatile, and it can be very, very profitable. And we like the way we trade this market. So let's clear the screen, go to our next market, and see what that is. And that's going to be the euro dollar against the US dollar. And as you can see, we had a big down day today, meaning the dollar was very strong from the 132 level. This goes down, dollar goes up. So this the euro going down against the dollar. You can see we hit the PSAR today, and that's now at 132.33. So that's where it's indicated. Longer term, our monthly trade triangles are short from 139.69, quite a ways up here, somewhere around these levels. And obviously the market's a lot lower. And only our weekly is on the upside, and that's giving you this plus 50, minus 55, indicating a trading range. Can we come down towards the 127 level again, 128 level? Absolutely. Longer term, I think this is going to be a serious problem for Europe. I don't think they're just going to own up to it. That's the problem. But you can see we had a little bit of a divergence here where it's sort of getting down from an overbought situation. I think we want to look for it to get down below minus 80, possibly down to minus 90, and I think that would be very possible to see. And again, I think the way to trade this market, possibly you could be, I was listening to someone, they want to be short here. Let's say you sell X dollars worth of currency, euros, and buy X dollars worth of gold, because it could be a good hedge against that. So let's see how that plays out. Next market's the US dollar index. Again, this is just the reverse of the euro. It still hasn't hit the PSAR, which comes in today at 79.58. We're 79.37 last, so another 20 points, 21, 22 points that would kick in, indicating that we put a low in here. This is about a 38% retracement, and we're a minus 60. Let me just show you that very quickly. So let's go to 6 months, and we take our Fibonacci tool. Again, we go from the highs right here. So when you see the little yellow box over here, it means it's live. And you just drag it down to the lows, which is right there. And we've hit the 38.2%. We could possibly get now to 78.26, which is a 50% retracement, and possibly down to 77.42, which is a 61.8%, meaning that would be a classic Fibonacci retracement. And I think as we go down here, we can probably see the market is oversold. So it's just coming out of that mode. So we'll see how that plays out. But generally speaking, that's going to be, I think it's two-way street, minus 60, trading range. Just be careful what you're doing there. So let's go to our next market, and that's going to be the CRB, Reuters Jefferies Index. This is sort of a little bit of a disappointment. We thought the market had made the turn. However, the last 4 days, it's been coming right back down, negating that head and shoulders base that we were looking for. But nonetheless, we're in a minus 55. Again, this is a trading range, and we did get very overbought, as you can see, and now we're coming back into a more reasonable situation, maybe even going lower than we are right now. But certainly I think around the 307 level, which is this low right here, 306.83, 307, I think that's where the market could find some support. But really speaking, it looks to be on the defensive right now. So let's go to the markets we talked about earlier, and that's going to be looking at the Edward Life Sciences, which is plus 100, up 6% today, a nice mover. And this is what I love about trade trials. You were plus 100, but look at where the signal came in at $77. Now I know it's only $5 high, but this came in actually about 10 days ago. 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago to be exact. So these things happen before they really hit the news. I mean, the great earnings came out today for Edward Life Sciences, and it's plus 100. Can it go higher? Yeah, it looks like it can go a lot higher. And I would take the lows around 62 here, and these recent highs right around the 78. So that gives you 16. 62 from 78, it gives you 16. At 16 to this level, it gives you 94. So I would think we'd be looking at this. I'll just write that down very quickly so you get the measurements. So we're looking, let me just take that off the screen. We're looking at here. This is around the 78 level. And we're looking at the lows right here, which is about 62. So you take those two apart, subtract 62 from 78, it gives you 16. Then you add 16 and 78 right here, and it gives you 94. So that's the target zone for this market, 94. It looks very, very good. It's currently trading at 83, so it looks to be like about a 10% move from these levels. Looks very, very good technically to us. So let's clear that off. Go to our next market. The next market we're looking at is MATTEL. Again, super earnings on MATTEL. Very strong upward move out of a nice consolidation energy platform, energy field here. Everything's plus, plus, plus. You can see we got our signal back in November to be actually not even November, October 26th, 28.49 to be a buyer. And it's obviously moved sideways a lot, but nonetheless, the trend is your friend, and you don't fight the market, you move with the market. That's really turned out to be a very, very nice trade for us. So let's see how that plays out, but it looks like it can go higher, maybe to the 33 level, put another 10%. But nonetheless, it's a very, very nice move today out of this energy field. So let's go to our next market, and that is going to be Best Buy, symbol BBY. That's a minus 70, but the long term is still positive. You've had a pullback here. Now, this is what I want to share with you. We could take our Fibonacci tool, go from the highs, drag it to the lows, and let's get this closer in so we actually get a really nice picture of this. So let's just go up here, and let's go to 3 months. And I'm not sure I can go to a month. No, a month is too close. But 3 months, you can certainly see the market hit the 61.8%, which is 23.84. It's currently trading at 24.04. So it indicates that I think this is more of a buy than a sell right now, especially with the problems with RadioShack. Does RadioShack go out of business? And if they do, where do they go for their components and everything else? Be Best Buy. And yes, I know the arguments for the online stores. But we're trading stocks here. We're not disputing the success of online internet sales. But generally speaking, this market fell down. It fell back to an area of support, and I think we'll see this market consolidate, and I think we'll see it probably go a little bit higher. Trade triangles are positive longer term. Short term, they are mixed. So you've got this minus 70 emerging trend, but the weekly's down, so that causes us to be a little bit somewhat hesitant of saying just be a buyer here. I think you'll have an opportunity to buy at some time. But hey, one thing I want to share to you, maybe one-on-one Market Club coaching is right for you. We've gone through January. You probably said to yourself, well, I'll do it. I'll think something I'd like to do. But hey, just give us a call at 877-219-1482. The call is free, and the consultation is free. So you've got nothing to lose. Find out if it can help you. I am really convinced it will help you because we've got some great markets going on here, and it's a great start of the year. We are up for the year in the Dow and the S&P and the NASDAQ, and that normally portends in history, tells us anything that the market should be good this year. But the key thing is to move with the markets, and that's the one thing the triangles definitely will help you with. So give us a call, 877-219-1482, and see if one-on-one Market Club coaching is right for you. Hey, this is Adam Hewison for Market Club. I'll be back tomorrow at the same time, the same place. Have a great trading day.